Hey guys, how's it going? It is Sunday, August 9th. It's about 5 p.m. So obviously the market is closed because it's the weekend. But I was just thinking about my possible plays for this coming week. And I'll be honest with you, I was struggling. I couldn't find really a good setup on a ticker that I wanted to play. This is just the heat map of how we closed Friday. So big tech was a little bit in the red, but overall, for the most part, the market was in the green. But you can see semis were beat down as well. AMD down 2.2%. Micron was flat again. So I mentioned in some of my other videos that I was taking a look at Micron because over the past week or so, Micron's just kind of been beaten down day after day. And so I thought maybe now is a good opportunity to get into Micron to open up a cash secured put if I think now it's due for a rally. So I was taking a look at the options chain, and again, these are for options expiring this coming Friday on the 14th. And I was looking at the at-the-money strike just to see, what kind of premiums are we dealing with. So the at-the-money put is right now, or at least at the end of day Friday, $87 in premium for $48.50 in collateral. So that's about a 1.8% return on my risk, which is not very good. It's I would say okay or average, but it's not. I wouldn't call this a juicy premium. So then I went to the TradingView stock graph here and said, all right, let me look at what Micron is doing. Let me look at what the Fibonacci's are showing. I have these trend lines that I drew a few days ago. And so let me just zoom out. All right, so just taking a look at these Fibonacci retracements and also my kind of poor man's trend lines here I drew. I don't know. It's been bouncing off this trend line for the past day or two. So if I believe in that, then this should be a relatively good support level for Micron, which would tell me that it wants to rally up now. But really, actually, tomorrow might be the key to see if we get confirmation of whether it wants to break through this trend line or bounce back off it. There are some bearish indicators in that it's trading below the Ichimoku cloud. Also, the squeeze indicator here shows a slightly bearish momentum. So that is not great in terms of opening up a put because you want the stock to go up after you open up a put. And more specifically, after you sell a put option, I should say. But we'll have to wait and see because, like I said, it's just not a great setup. I'm not too happy with it. The premiums aren't great. In my opinion, the premiums don't really justify the potential risk of Micron dropping even more. And the weird thing is that the semiconductor stocks, as you've seen in my prior videos, AMD has just taken off like a rocket. Intel has not been doing so well, but that's for other reasons. Nvidia's been doing well recently. Here's the AMD chart is almost like the opposite of Micron. So I'm not quite sure why Micron is not doing so well. As far as I know, there has not been any bad news out on Micron. So something just keep an eye on. Again, I'm not in love with this play, but I will see how we're doing tomorrow morning. One interesting thing though is I'm very curious what's going to happen in a few hours once futures open up, because the president actually signed or is talking about signing an executive order in terms of the stimulus bill. So we'll see if that is looked at favorably by the market, because if you remember from my video on Friday, I actually currently own 200 shares of Space that I let myself get assigned shares at $19 each. So right now Space closed at about $18.25. So I'm about 75 cents in the hole at the time of the market close on Friday. What I'm really hoping for is for Space to rally, obviously. And then the question is going to be, do I sell a covered call on Space for this Friday? And the premiums on Space are actually pretty good. Let's just take a quick look at the options chain as we closed on Friday. So selling a covered call. So if I were to sell a covered call at my cost basis, which is $19, it's a little bit less than $19 because I collected premium when I sold those puts that I got assigned on, but just for argument's sake, let's just say it's $19. So at the end of the day Friday, those were trading for about $69 a contract. So $69 divided by 1,900 in essentially collateral that I have tied up in that stock, that's about a 3.6% return on my collateral, which is very good. So I have a couple options I can do. I can sell a covered call at my cost basis for roughly 3.6%. Now, again, obviously this number is going to change once the market opens tomorrow, depending on where the share price is. Or I could try and squeeze a little bit more profit out of it and sell a covered call at a higher strike price, like let's say 20 or 20.50 or 21. I would collect a little bit less premium up front, but if the stock does go to that level or higher, I would collect more in stock appreciation. Because if I sell it at my cost basis, I'm not going to get any money in stock appreciation. I'm just going to get pure premium. And my third option is don't sell any covered calls. If I really just want to get rid of the stock as quickly as possible for profit, let's say we open up Monday morning and SPACE is trading at $19.25. Let's just say gaps up by $1 from where it closed. Well, then immediately I will be profitable, right? Because I own the shares at $19 a share. If, just for argument's sake, SPACE opens at $19.25, that means I'm profitable by 25 cents per share. Like I said, I had 2 contracts open that I got assigned on, so I own 200 shares. So I would be immediately profitable $50. So it really depends on what my overall sentiment is on Virgin Galactic, meaning, if I'm concerned that the overall market may drop even more this week, or specifically Virgin Galactic might drop more this week, well then maybe I just want to get out of this trade as quickly as possible, and even a small profit is better than no profit. So those are really my 3 options in terms of selling a covered call at my cost basis, selling a covered call higher than my cost basis to try and gamble a little bit and squeeze more profit out of it, or just hopefully, as long as the stock opens up above my cost basis, just flat out sell off the shares and just be out of the trade completely. I mean, the worst case scenario is that SPACE opens up even further in the red, because then this premium value is going to be even less because it'll be far out of the money, so I won't collect as much premium if I decide to sell a covered call. Or if it really plummets, like let's say SPACE opens at like $14, well then I'm probably going to have to sell a covered call less than my cost basis in order to collect any sort of reasonable amount of premium. So all depends. Let's see what happens in a couple hours with futures. I'll keep an eye on the market in pre-market, and then obviously the real game starts when the market opens at 9:30 a.m. tomorrow morning. The one ticker that I did find that looked a little bit juicy this week was Draftkings, which is DKNG. I always think about Donkey Kong whenever I hear that ticker, DKNG, but it's Draftkings. If you're not familiar with them, they actually are basically a sports betting site. So they do like fantasy football and other forms of sports that you can bet on. And their premiums have been juicy for a while, actually. And dare I say, they've kind of been a meme stock. I mean, if we just take a look at the graph here, this is, early March when the illness happened. And you can see it just took off. I mean, it almost went parabolic where, look at this area here where it just kind of shot up like a rocket. I mean, it went from a low of about $11 to a high of $43. And I know this was definitely a hype stock or meme stock early on a few months ago. So the real question is it still a meme stock? Because you can see it's sort of plateaued or even come back down to earth a little bit. So right now it's trading at $34. So would not tie up a lot of my collateral if I did open up a put on it, but I'll have to see again how this ticker opens up Monday morning. I'm really not sold on it personally. I still think it's a bit of a hype stock or a meme stock, which, as you know from my prior videos, kind of scares me a little bit, and I tend to try and avoid those tickers. But desperate times call for desperate measures, because I really can't find a good setup this week unless things change when the market opens tomorrow. So let's just take a look at the options chain on Draftkings. As you can see, the past week it's still been kind of flat or going up a little bit. So still a little bit bullish on the ticker here for last week, but let's just take a look at the options chain and I'll tell you what I'm talking about. So the at the money put for the $34 strike, you would collect $215 in premium. So $215 divided by $3,400 in collateral. That's a return on risk of 6.3%. Now this is a juicy option. So this is why I'm like, you know what? It might be worth the little bit of added risk of playing a meme stock here. And I can play a far out of the money put. If I really wanted to, because it's trading at $34, I could probably go down to like the 27 strike if I wanted to play it extra careful, because even at $27, I would still collect roughly $20 in premium. So it's $20 divided by $2,700 in collateral. That's still a 0.7% return on my risk. And if you've watched my videos that I tend to have a personal limit of at least 0.4% return on risk. So this is almost double that. And we are about, $8, $7 or $8 away from my strike price to the share price. So that is a decent amount of buffer. So the other thing, and the reason why Draftkings is so juicy, is because Draftkings has earnings this Friday, and it's pre-market this Friday. So one of the little things that concerns me is that, if Draftkings has bad earnings and I'm holding a put, and let's say the stock just tanks, I really only have that one day to manage the position. So there's only Friday, because earnings are going to come out Friday before the market opens. So Friday morning, this stock is probably going to gap up or gap down. Draftkings is not one of those stocks that likes to trade sideways. So I would have basically that day to try and figure out, do I want to roll the option? Do I want to get assigned shares? What do I want to do? I would have preferred if Draftkings had its earnings like on a Wednesday or a Thursday, so it gives me more time, and also the market more time to kind of recover and kind of figure out what it wants to do with Draftkings. But, I may make one play on it. I'm not sure. I'm not going to go all in like I did on Activision this past week, just because I'm not in love with the company or the ticker. Like I said, I think it's a bit of a meme right now. But the premiums are a little bit too juicy to pass up. So looking at the overall graph here, I drew some Fibonacci levels, and I drew it from the bottom back in early March to its peak here to see where the Fibonacci levels are. And right now, there's one Fibonacci level as a support, if you believe in Fibs, at about $31, and the second is another one at 27. So if I can get in at 27, 26, you would have to blow through two Fibonacci levels to have my strike be tested. I'm not saying it's not possible, because as you can see, look at this graph. This stock likes to just jump around very quickly, which is partially why its premiums are also high, because there's a lot of volatility, not just because of earnings. But it might not be a horrible trade. Again, looking at AMD here, AMD just keeps going up and up and up, and I really don't want to own AMD in the 80s, which is pretty much where I would have to sell my puts in order to collect a decent return on risk. Activision Blizzard, we had a pretty big sell-off after earnings, and you can see in the squeeze indicator here, a lot of bearish momentum. So I'm going to avoid Activision as well, just because it seems like it's on a downtrend, and I don't want to get assigned shares of Activision right now. IWM has also been taken off like a rocket, and it's really high. It's at 156. I used to trade this ticker when it was in the 120s, 130s, maybe even low 140s, but at 156, it's still a little bit too overvalued in my opinion. Disney gapped up. Disney's kind of doing the same thing. It's going to the moon right now, because it had decent earnings, or the earnings were not as bad as people thought they were. So Disney gapped up really hard. For the longest time, Disney was trading between like 110 and 120. You can see for weeks. And then all of a sudden now it's trading in the high 120s, almost, going past 130. Space is also in a bearish momentum here based on the squeeze metrics indicator. Its RSI is oversold, but again, the Ichimoku cloud is showing a bearish trend. It's trading below the Ichimoku cloud. So we'll have to just wait and see what Monday brings, because I think there's so much uncertainty right now in the market personally in terms of the stimulus bill. Now they did something over the weekend in terms of the executive order. So really the question is, how is the market going to react to that? Is that going to be a good thing? That can be a bad thing, because still like the official stimulus bill has not been passed yet? Or on the flip side, should I open my positions early this week before the stimulus bill passes, because maybe you think that the overall market is going to bounce up once the stimulus bill eventually passes? So no matter what ticker you're playing, no matter what put you have, you're going to get money, or you're going to profit off it, because every ticker is going to go up. I don't know. Maybe if nothing good looks to me tomorrow morning, maybe I'll just play it all cash tomorrow, because I don't want to force a trade and get stuck bag holding a ticker that I'm not, in love with, or really don't want to hold shares of stock for. So yeah, I really had a hard time finding some good plays this weekend. Let me know in the comments below, or let me know in the Discord server if you have any options you're looking at, or what tickers you're looking at opening positions on. But as always, if you have any questions or comments, leave them below, or better yet, in our Discord server. And happy trading.